Hey everybody, no turmeric on this one. I want to talk about the rally in the stock market, which basically I called going back a little over a week ago, and that came from looking at the numbers that come off the daily Treasury statement. Those flows, those government flows, are incredibly important and very much market leading, market moving, I should say, as well as moving or impactful for the economy. Now, I also want to tell you that my latest issue of my report, The Fiscal Trend Trader, is out today. That's a weekly report that I put out, which looks at all the data from that daily Treasury statement. If you want a sample copy of that, you can go to www.pitbulleconomics.com and you can get a sample issue. The report is by subscription and it's $85 monthly. It's an excellent report and it looks in depth at the numbers and the trends from that daily Treasury statement. And the good thing about that is that hardly anybody looks at that. But it is probably the most important or powerful set of data. When you're talking about all markets, not just stocks, the economy, gold, oil, currencies for sure, foreign exchange. That's the place to look. You're talking about $4 trillion plus of government spending. That's an enormous flow. It affects everything, everything. And it's right there every single day. Nobody looks at it. So it's been a great resource for me. And the report is available, www.pitbulleconomics.com. By the way, just a little insight off of this week's letter is that we saw another big tax refund go out last week. We now see government spending has surged back to a level that is now at the highest gap versus last year. In other words, the 38 billion, nearly 40 billion over last year so far this fiscal year. So what does that mean? Good news for the economy. We're not going into recession. Stocks are going to continue rallying. And by the way, the big sleeper thing here, I think, is going to be further Fed rate increases. I know there are a lot of people who were saying recently, that's not going to happen. Some people were even saying more QE. I'll tell you right now, that's not going to happen. And we're seeing a pickup in inflation, which is something I predicted because rate increases are price increases. A lot of people don't understand that. When the Fed raises rates, that's a price increase that flows through to all prices in the economy. So they actually create inflation when they raise rates, when they think they're, keeping inflation down. They're not. Rate cuts keep inflation down. That's deflationary. That's lowering prices. So anyway, that's it for today. Enjoy the rally if you're long. If you're short, I'd get out and I'd get long. Bye.